Welcome to Crypto Tutors. We are humanizing cryptocurrency and blockchain and are bringing the best trailblazers and success stories like Isaiah Jackson, Tanya Evans, Ian Bellina, Cleve Messidor, and Tinashe Nitaganga on the Crypto Couch. Click subscribe and the bell to be the first to watch the latest interviews every single week.
This episode is sponsored by Cash App.
Crypto tutors, crypto tutors, crypto tutors. Hey,
It's a way.
Making money in my sleep? Making money in my sleep.
Welcome back, ladies, gentlemen, and other. This is the Crypto Couch brought to you by Crypto Tutors, where we help you by bringing together the world's trailblazers in crypto and blockchain, the folks that are leading us into the future. Martin Pring, it is so amazing to have you.
Thank you, Lisa. It's great to be here. Thanks for inviting me.
Absolutely. We couldn't do what we do without folks like yourself. So we're really happy to have you. And, before we get started, let's tell folks a little bit about who you are, what you've done, and why it is so critical for them to watch your episode. Martin Pring has been in finance since 1969 and has become a leader in the global investment world. He founded Pring Research in 1981 and began providing research for financial institutions and investors. He's a technical analysis guru and is the inventor of No Sure Thing, also known as KST. Today, we're going to unpack all of that. Martin, please tell us a little bit about yourself. Where are you from?
Well, I was originally born in England, and then I went to Canada and spent 12 very wonderful years up there, and then finally moved down to the States in the 1970s.
Well, we are so happy to have you here in the States. In your journey, how, did you get involved in, are you a statistician? Like, what led you to create No Sure Thing?
That was a little inspiration from a friend of mine who's no longer with us, unfortunately. And when I was a broker in Montreal, I went to see a presentation that he gave, and I was really spellbound by what he was able to tell us and so forth. So he used to work with long-term smooth momentum indicators, which is what the KST is. And so I came up with an alternative kind of formula.
So let's talk a little bit about, momentum smoothing, which is, we want to make sure that folks understand what smoothing is, a momentum indicator as well. Can you break down some of those concepts so we can make sure that everyone is on the same page, please?
Well, momentum really measures the velocity of a move. And it's really interesting if you put a sentiment indicator against a momentum indicator. I won't say they're identical, but there's a very close connection because markets are determined, or the prices of markets are determined by one thing and one thing only, and that's psychology.
The thing about your indicator is that there are 4 intervals that are being taken into account versus other indicators where there are only like maybe 1 time interval. Can you tell us a little bit about some of the unique aspects of No Sure Thing?
Well, any particular price at any particular time is determined by the interaction of a lot of different time cycles. And so if you're taking a simple rate of change, for example, you may have a time parameter of 12 days or 12 hours or whatever the chart is. And that just reflects the cycles revolving around that one particular time span. With the KST, what we have is 4 different time spans. We'd love to get hundreds and hundreds, but that would make it too complicated. So we just have 4. And the idea is to get an indicator that reflects the smooth wave of what's going on, and yet turns quickly enough to be of use from time to time when you're trading with it.
So let's talk a little bit about, even the name, no sure thing, it's sort of a play on words because when we think no, we think NO, but this is KNOW. So tell us a little bit about the origins of the name. What brought you to name it that?
Well, I got very tired of hearing people comment on the market and saying, this is a sure thing, we'll make you rich, just follow me, and so on and so forth. So I deliberately, sarcastically called it no sure thing, because you know it works most of the time, but you know it's not a perfect indicator. There's no such thing as a perfect indicator. So that's how KST, or no sure thing, got developed or named.
Let's talk a little bit about some of the other aspects or some of the other indicators that complement no sure thing, because we tend not to just have folks use one singular indicator. Is that correct, or what are your thoughts on that?
Because basically what we're trying to do is work in terms of probabilities. And what we need to have is a number of different indicators, all of which we know is, none of which we know is perfect, but each of which we know works consistently well over different time periods and different markets. And so we put them together, maybe you need maybe 4 or 5 different indicators. You put them together in a kind of an art form with these scientifically derived indicators.
So what are some of the indicators that you would overlay with KST that complement it?
Well, one of the things would be a moving average over the price, for example, or a trend line on the price. Or I might take another momentum indicator from a different time with a different time span and use that as well. It's really, I think people need to get to learn all of these indicators and then figure out which ones they feel comfortable with. Not the ones that I say or someone else says, but that they feel are comfortable with. Because when you've got money on the line, then you need to be very strong in your opinions. Otherwise, you're going to run into problems.
And so, Martin, with that being said, I think it would be awesome if we were able to take folks through, especially beginners that may just be being introduced to KST, to show them how do we apply this technical analysis. And perhaps you can walk us through a chart for Bitcoin that we see here. Does that sound good?
Well, as luck would have it, we do have a chart which we could bring up.
You know what? Speaking of luck, they say that it's when opportunity meets preparation. So naturally, we'd be lucky.
Absolutely.
So please take us through it.
What we got here is a chart, a daily chart of Bitcoin. And underneath is the daily KST. And the idea with the KST is that you want to make, in order to get your buy signals or your momentum buy signals, you want like the indicator to cross above its moving average, which is usually a 10-day moving average. And that's where we get an arrow, a green arrow with the number 1 on. And then all the way through, you'll see that I've highlighted the low points and the turning points in the indicator from 1 to 10. You notice that signals, the first, 6 signals result in pretty nice rallies. And
Yes.
7, 8, and 9, and 10 are not very good. In fact, 8 and 9 are quite weak. And the reason is because the signals from 1 to 6 are in the direction of the main trend, which is the bullish trend. So that's where you get your magnitude and your duration. And 8, 9, and 10 are not so good because they're going in the wrong direction. And they're bullish signals going against the bearish trend. So one of the things you need to do to help you get better results with the KST or any other short-term indicator like an RSI or a stochastic is to try and have some understanding of what the direction of the main trend is. And if you've got the main trend correctly identified, then a rising tide lifts all boats and vice versa. So that's why you get a difference in the ability of the indicator to signal a strong advance and a long advance on the left-hand part of the chart, but not the right-hand part.
Okay. And so, for instance, like a beginner who is just beginning to integrate KST into their analysis, if we were to look at buying signals, let's dive in a little bit deeper from 1 to 10. Where would you say is the strongest buying signal?
Well, in terms of technical probabilities, number 3 would be the strongest one, because prices are very volatile after they've had a bit of a rally and cross that red line, which is the 200-day moving average. And then they get less and less volatile. And that reflects a battle between buyers and sellers. And the bigger the battle, the stronger the signal. And therefore the implication of the bigger the move. It doesn't always work out that way, because I think number 4 was the biggest move.
Right.
But if you take number 3 in conjunction with, if you've drawn a trend line or you're looking at the 50-day moving average crossover, which is that blue line,
right,
then that would have given you an indication that prices are headed higher.
So number 3 would have been the strongest buying signal
from a technical viewpoint, yes.
From a technical
But in terms of reality, number 4 was the best one because it gave you the biggest profit.
Okay. And so 3 to 4 have the strongest signaling for buying. One other thing with that is I noticed on the daily KST, 3 and 4 are below 0.
Correct.
So how does that play into the signaling as well?
Good question. The more below 0 it is, the more oversold the indicator is.
Okay.
That means that psychology, remember I was saying prices are determined by psychology.
Mm-hmm.
That means that the lower you are, the more pessimistic people are. And if they're pessimistic, they probably sold. And so that leaves the market clear to rally higher.
Okay, awesome. And so,
good question.
Yeah, well, this is one of the KST is one of the indicators that we kind of live by at Crypto Tutors, which is why we were so excited to bring you to the couch and have this conversation with you and introduce us to our community and everyone. We want to make sure you check out pring.com. We'll get into that later. But Martin, should we move on over to the bearish cycling or the bearish signaling and sort of break down, some of the indicators that can help us determine a downward trend?
Yeah, we're now looking at the sell signals, as you mentioned, and you find that the sell signals on the uptrend, they're the counter signals now. So then the downside move is not so great. In fact, the first one is actually a sideways trading range. And then as you move further over, you move into that downtrend again, and those signals become stronger from a downside point of view, from a shorting point of view.
And what's interesting about this chart is that it seems like it is more consistent with the price chart, with the pricing. It looks like it's more in sync with the ebbs and flows of the price chart.
Yeah, that's true. But the other point I was going to make, and I should have made this earlier, is that the other ways we look at and interpret the KST or any other momentum indicator from that point of view is if the price goes on and makes a high and then a higher high, and the momentum makes a high and a lower high, that indicates there's less velocity or less support as the price is moving higher. And that makes the technical structure vulnerable. So you can see here a series of declining peaks in the KST starting from January going through to the final high in April. All those peaks are lower than their predecessors. So that indicates a very weak underlying technical structure because the momentum is getting weaker and weaker and weaker as you move along. But there's nothing to stop prices going even higher and having another lower level of momentum. So how do you know you're not going to get another divergence? What you look for is to kind of draw some kind of a trend line. In this case here, you could have taken the 50-day moving average and said, okay, that point when it crosses below the 50-day moving average in late April, that's the time when the trend is now reversed and it's confirming what's going on with the momentum. Because up to that point, you don't know if it's going to be another negative divergence taking place.
I see. And so it's important to delineate between the pricing, especially when it's going up versus the velocity of the moving averages, because that type of divergence gives us an indication that more than likely we're going to head towards a downward spiral, even if there's some uptick in the pricing.
Right. In fact, right, we have a rule that says when you make a marginal new high and the momentum is barely able to rally above zero, when that trend is confirmed with a trend line break or a moving average crossover, usually you get an above average move that follows that.
Okay. And so let's dive into the red line and the blue line, right? So, oh, that's okay. There we go. Okay. Yep. All right. Perfect.
Yeah.
Sorry about that. Okay. So the blue line versus the red line, when we look at KST, let's make the distinction between those two lines. What does the red line signify versus the blue line?
Well, the red line is a 200-day moving average, which a lot of technicians will use as a demarcation point between a primary bull market and a primary bear market. So you remember what I was saying about counter-cyclical signals. How do you determine what the cyclical trend is? One of the pieces of evidence you would have would be the price's position relative to its 200-day moving average. Whereas the blue line is a 50-day moving average, and it's more of an intermediate type of indicator of what the intermediate trend is. But one of the things you want to watch with moving averages is how reliable have they been in the past? Because you remember what we were saying, nothing is perfect in this world. Well, in this case here, if you look back at that blue line, you can see that it was touched or approached on numerous occasions.
Right.
Every time it came down, the price found support and then bounced. That's a sign of a reliable moving average. If you go back, in this case here, what's it, about 6 months or something prior, and it acts pretty consistently. When it finally gets when you finally get a crossover, that's a pretty strong signal. Whereas if you had a moving average which is not touched at all or even approached, that wouldn't be such a strong signal because that moving average wouldn't represent such a dynamic level of, in this case, support.
So, right now in the crypto market, investors are extremely, and traders for that matter, are extremely skittish. Bitcoin has rebounded slightly. I think right now, today, it's above 30,000 off of its low from yesterday at around 29,000. I think it's trading at around 32 or so. And with the KST indicator, what are your thoughts on the direction things are going in? Do you think that the bulls are going to rebound, or do you think that the uptick is a dead cat bounce, as they say?
Actually, I think it's probably going to turn out to be quite good because I was watching it earlier today, and you can draw a trend line on the chart. This chart's about, I think, 3 days out of date or 2 days out of date, so it didn't include the last drop that we saw. But there's a trend line you can draw from that June peak to all those little peaks as you get to the latest data. That trend line's around 32,000, like you mentioned. That's what it's trading today. So my feeling is if it gets up to 32.5, it's going to violate that trend line, and we'll see a bounce to the previous high, which was set in mid-June, I guess. And then I think that's around 41,500. Then it's going to run into a bit of resistance.
Okay. So if we breach that 32.5 range, that will establish a new line of support. And that, if that happens, that new line of support, more than likely we will see a continued running of the bulls, so to speak. And once we hit that $40,000 mark, that's where, if we breach it, we'll establish a new line of support, which would be great for the bulls. If not, we could expect a downturn. Is that kind of, do you feel comfortable with
Yeah, I'd
that
expect
assessment?
it's 41.5. I would expect to see a lot of backing and filling for a
Yep.
few months or maybe less before it could move higher, if it is going to move higher. But we also must bear one other thing in mind, is that if that trend line is violated, it's important to obviously for it to go through, the price to go through, but it also needs to stay there, because if it can't stay there, that's a false breakout. That's not a false breakout.
Oh, don't worry about that.
That's a false
Edit that out.
and that's usually followed by above average moves. Maybe
Sorry.
that it was
Go
just
ahead.
the trend line, and that affected your props there.
I know. You know what? I don't expect any more props to fall from the sky. So I think we're good. And hopefully that wasn't telling us that Bitcoin's going to fall too. Sorry. Okay, I'm ready. So, okay. So 40,000 will be our price target if it
41.5, that's the high of the previous move.
okay. But it's got to stay. It's got to stay within the 32.5 range.
Above the 32,500. If it breaks through today, we'll say, and goes through again tomorrow, and then it can't hold Friday or whenever it is, then that's a bad sign.
Okay. Do you think the floor will drop and will go below 29,000?
I'm going to wait. I'm treating it as a breakout at this point. Or if the breakout happens, I would go with that. And then if it doesn't happen, that's when I would change my mind.
Okay. So let's look at this new chart that we have up. And what are some of the key takeaways applying KST to this chart that we want folks
Well,
to
first of all,
understand?
it's a 30-minute chart, it's not a daily chart. The other two look at daily.
Okay.
And so we applied the KST to the 30-minute chart. And the idea here, again, is what I was emphasizing before, is that when you get a higher peak in the price and a lower peak in the oscillator, in this case the KST, that indicates a weakening, and it must be confirmed by the price confirming that weakness. Otherwise, you could have 3 or 4 or more negative divergences. So what these setups do is they show you where you had the negative divergence and where the price has moved higher, and then that's confirmed by a trend line break. And you can see that all the way through 1 to 5. And we had 5 again. The trend line in the case of 5 was a horizontal trend line. It actually moved, as we've just been talking, lower, than it went down to 29 or so. That's latest plots around 30. So it was actually a lot more. It went down a lot more than it appears to have done in this case here. That's a negative divergence. And then on the extreme left-hand part of the chart, we got a positive divergence where the price makes a lower low and the oscillator makes a higher low. In this case here, it didn't result in much of a rally, again pointing out that these indicators, or these setups, where they work most of the time, do fail from time to time. And it's very important for people to make sure they understand that these things can fail. Even the best laid and highest probability technical setups will go that way.
Yeah, I mean, and the truth is, again, we will underscore how important it is to remember that there is no sure thing.
You got the message.
Boom. So, Martin, as we wind down, what are some of the key insights or takeaways you'd like for our audience who, we have varying degrees of sophistication, from, beginners, which is the majority of the folks that watch this, to intermediate, and of course, advanced. Perhaps you can share for a beginner what a takeaway would be for someone who is at the intermediate level, and at the advanced level, from a chart analysis standpoint.
Well, I think the principles are the same for everybody.
Okay.
And one of them is to keep things as simple as possible. I often see people developing these really complex systems and they just use these as a crutch. against thinking and against acting properly in the markets. Second thing I'd say is try and remove emotion as much as possible from your trading. And that could be as little as not looking at the price every 10 minutes or every 5 minutes or even every day, depending on what your outlook is as a trader or investor. But every time you look at the price, it draws you in emotionally, because as soon as you put money on the line, you also put a lot of emotion on the line, and that's the biggest thing that traders need to learn, is to avoid as much emotion as possible. So that also means don't have too much leverage, because that leverage will just increase your emotion more than the actual leverage. One of the other things you need to do is to mentally rehearse when you go into a trade. In other words, you don't look and see how much profit you're going to make. You look and see what is the loss. If the market went to a certain place, where would I get out? So you have to put a stop loss in, intelligently place stop loss, because that will enable you to be much more successful. If you just get in and don't have a plan to get out, in fact, your plan to get out should be hatched before your plan to get in, and say, is that risk that I need to take worth the potential reward from that particular trade or that particular investment?
Very wise, sage advice, especially given how the market is fluctuating so aggressively right now. Again, folks, start with the end in mind. Know how much you're willing to lose, and know when is right to sell before you go into any trade. Emotional intelligence is crucial. Be mindful of not over checking prices and what have you. More now than ever, you don't want to make any premature moves, any make any impetuous decisions. And that's why we wanted to bring folks like Martin Pring on to the show to help each of you understand, what are the tools that you can lean on to help with your decision making. So Martin, where can folks find you? Where should we direct them to keep up with all of the great work you're doing?
Right here, Pring.com.
Right? Pring.com.
Yes.
And you also have a university. Is it Pring University?
Well, we're hoping to get that in the very near future. We've pretty well finished it. It's going to be about 15 or 20 hours of online tutorial. That should be up in a couple of months or so.
That is
We're very excited about that.
I mean, talk about exciting. I'm like jumping out of my seat over here, because I can't wait to get my hands on that course. And I know a lot of the folks that are watching, they recognize that knowledge can be transformed into wealth, which is why they continue to watch the Crypto Couch. And it's awesome to hear that if you go to pring.com, you'll be able to see when Martin's course is available. And, you can take a much deeper dive into technical analysis and, what No Sure Thing can do to help you get a little more certainty around your trading.
Yeah, you can go to the site. If you like the look of it, give us your email address and we'll let you know when it transpires.
That is awesome. Martin, you've been so generous with your time and your wisdom. We are so honored to have had you on the Crypto Couch. Thank you for sharing with us and walking us through your charts and how to apply KST. We're definitely going to be hopping over to pring.com and enter your email, subscribe. We'll put all of your contact information in the comments. Folks, we want to hear from you. What did you learn from today's show? Comment below. Make sure you subscribe. Of course, click the bell so that you can continuously get notified when we have new subject matter experts in crypto and blockchain. We'll continue to bring you the best and the brightest in the business. And good luck out there.
Want to learn more? Visit cryptotutors.com.